The end of May here, 2018, and this is our market Skyline, where we do a thorough review of what the stock, the commodity, the currency markets have done for the week, and get you guys ready to get out there, get prepared, know where the key levels are, what's going on in the news, so that you can make better investing decisions and more informed decisions. Matt, pretty flat week for the market. In fact, there's small range candles throughout the week. We were range bound, stuck in a range on the ES contract. Whenever you get small candlesticks, some green, some red, but very, very narrow in range, what is that telling you about pricing, Matt?
You're looking at a pattern called the high base. We talked about it last week in the market Skyline on the podcast. This happens a lot of times when the market's trying to find a direction. It typically will run fairly fast. It will go neutral, and it won't have any type of big movement one way or the other. It just kind of holds in a narrow range here, as you can see. If you're watching on Tap and Trading's YouTube channel, and if not, definitely go over there to Tap and Trading YouTube and subscribe to it. But outside of that, Tim, as you can kind of see here, it's got very, very narrow ranges. It's got narrow movement. It doesn't have any pure direction one way or the other. It is a bullish type pattern because it's happening at resistance. If it was happening down here at support, it would be a bearish pattern. So basically what you're seeing here, Tim, is you're seeing a quick run up followed by sideways pattern. As you see, this line we have right here, this is your resistance level. It's at 2740. So right here is your resistance level at 2740. If the market does break out, it tested it a couple times, tested it on Thursday of last week, tested it early on in the week, couldn't get any traction right above that, came right back down. But on the flip side, Tim, what was interesting on Wednesday, Thursday, and Friday of last week was that each day in the market, it kind of saw some early activity to the downside. As you can kind of see on this candle and this candle and this candle, you see some early activity to the downside, comes right back down into these support levels right there and cannot break it, immediately reverses it. If you look at this kind of on a 15-minute chart, you can kind of see this early movement to the downside followed by it coming right back up. This early movement to the downside coming right back up. Early movement to the downside coming right back up. And so all last week, we kind of saw that same type of thing happen where early in the trading day, the bears were like, yeah, we're going to see some bearish activity, but then it comes right back up. That shows me that ramp coming into the close is still strong. And if you see this break out on top of that 2740 area, you're talking the next level resistance, Tim, really isn't until about 2800 in that type of ballpark, which is about a 60-point movement on the S&P 500, which was a 60-point movement on the S&P 500 is right around a 5% movement right now. That 5% movement in the futures, that could be significant. I mean, if you're looking at trading in the futures market, and if you're just looking at just one standard lot type of situation, so if you say, okay, if it goes from 27, we'll say 45, you only have one contract. If it ends up going up to that $2,800, you're talking a good little $3,000 profit right there just on one contract. So those things can be significant. They're not small things. A 60-point movement on the futures, that is a big deal in a short time. And if it breaks this resistance level, I don't see anything stopping it economically from getting up into that 2,800. I mean, it seems like Fatican the third and Trump are going back and forth with their volatile relationship. They love each other one day, hate each other the next. It seems like they're back on the love fest. You're looking at the European debt crisis in Italy right now, but, in some of the election situations over there. But economically, I mean, there's nothing really economically to stop that this week. We have very, very few economic reports. You have unemployment report coming out on Friday. But outside of that, there's nothing really economically that's going to stop this. So if it does break out, I'm looking at a potential bullish positive too as it gets into the 2,800.
What's interesting is every 1 point move in the S&P is going to be a huge impact to somebody's bottom line. A 40-point move on the ES contract, that's $50 a tick, or $50 a point. So $12.50 a tick.
Yeah.
That's a big impact on one position. Now that's also true in options. It's true in volatility. It's true throughout all the different equities. literally price is being fought over with billions of dollars on a daily basis, guys. I mean, that's why candlestick analysis is so critical. You had a gap up in price on Monday, then you had negative news through the week that could have brought the market down, Matt. Trump was talking about how the deal with ZTE was not done yet and they still have to bail him out. Could have brought the market down. Then he pulled out of the North Korean summit, like you talked about, pulled the market down, but then it rallied back. It's very interesting watching this candle action. And a high base pattern is more likely to break to the upside than it is to come back. So the high probability assumption would be a breakout to the upside, and that would trigger a directional trade.
But Tim, I want to say something to that, though, because you're absolutely right. But there's a battle going on right now. Mm-hmm. And that's what you're seeing here, that battle, that constant battle between the bulls and the bears. The bulls trying to drive it up, the bears trying to drive it down. Early in the day, the bears were winning. The bulls came back towards the later part of the day. We saw that all last week. But guys, we don't want to fight that battle. You and I don't want to fight that battle. The listeners to this podcast don't want to fight that battle. We want to wait till we see the winning team. Okay. And that's why it's so vitally important. You've heard us say this so much in the podcast, in the coaches shows and whatnot, that you wait for it to break out at 2740. If you buy this right now, say you go buy a call option on the S&P 500, or say you buy the SPYers, SPY, or say you buy a futures contract on the /ES, any bullish trade right here, if you make that trade while this is basing here, you're fighting the battle. You're saying, I'm a bull. I want to pick up a musket and I want to go fight the battle.
Sure.
Well, guys, we don't want to do that. We want to wait to see who's going to win this fight between the bulls and the bears. We want to see it get back up above resistance at 2740. But as you can see on this candle here and this candle here, on 514 it tested above that level. On 522 it tested above that level. It's not the test above that level. It has to close above that level. That close above the level is very, very important. That tells you who's winning the battle.
Yeah, definitely. And as the battle is being fought, volatility continues to fade. Move on to the volatility index real quick. I want to show everybody how these things are related. While you're stuck in a range and nothing's going on until you get confirmation, options tend to just fade, which is what volatility has done here, Matt. We're basing down, nothing really to see here. As soon as something happens, a break to the downside, break to the upside, I would expect some volatility to pick up, especially on individual companies. Bullish action tends to drop volatility and bearish action tends to make it rise. So it'll be a good indicator to continue to watch. The VIX, nothing to see here, right, Matt?
I honestly don't even know why we even look at the VIX anymore.
Got to do it. We're option traders. I know. It's part of your process, right? And there's a reason why we have process, because when it does kick up, it'll tell us something. Until then, it's a quick one. You just glance at it, move on. You're going on to crude oil. Now, this one was a big one on Friday. In fact, there was huge news out of Saudi Arabia and Russia that they were going to go back in and review their supply restrictions and this and that. The market did not like it. The market absolutely tanked on crude. It went from about 70, and it was holding that moving average, by the way. It was holding support, and then boom, like a hammer, that thing dropped in one day, Matt, about 4.5%. What's your reaction?
It's down about 9% off the highs. Is where it's at. I personally, have been waiting for an entry point in crude for a little bit, not a long time, but for a little bit. Tim, is this an overreaction to the news, or is this something that maybe has the ability to change the trend to the point where we're no longer bullish on crude? Because right now you broke many support levels. You broke your moving averages. You broke your previous highs. You broke Fibonacci retracement levels. You broke 4 or 5 different levels of support. Is this going to change your bullish stance on crude?
No, not yet, because that old resistance, new support is probably going to be very, very key as it tries to find itself here. Now, this is one of those scenarios, Matt, where we've talked about it before, trying to catch a falling knife. If you're a new trader and the market starts crashing like this in a very short-term period, and crash is an operative word, but really just a good pullback, but in a very volatile way, you have to wait for confirmation, come up with a plan.
Yeah.
I would always tell everybody is build your plan when you don't have skin in the game. So on like a holiday or on the weekend, come up with a plan on how you're going to trade. If you wait until the numbers are moving around on you and then you're like, okay, what do I do now that I'm either making or losing and the money's changing? You're adding emotion to this, which makes it more difficult.
Well, and I also want everybody to understand that we love crude oil. We love trading crude oil. There's so many different systems we use crude oil in. But we've always said this: if you're going to trade crude, you have to understand economics. You have to. Sure. You can't just understand technicals when you deal with crude oil. You have to understand the relationship that the dollar has to crude. You have to understand how countries like Iran and Saudi Arabia and Russia and China and the United States, how these countries can drive crude fairly aggressively one way or the other with their trade agreements. I mean, you look at what happened to crude in end of 2013, 2014, 2015, when you saw crude drop from 107 all the way down to $27 a barrel. That was all based on economics. That wasn't based on technicals. That wasn't even based on fundamentals. It was all based on economics. And so, these things can happen in crude, very similar to what we saw in early February, where this kind of happens to crude. It kind of comes down fairly aggressively. It went from $66 all the way down to 58, an 8-point movement on a $66 barrel. You're talking about a 12% decrease in price in literally a week and a half. Last week, you go from 73 at the high all the way down to about 66 and a half. You're talking right around a 6-7 point move. That's about a 9-10% decrease in price in really kind of just about a week. My question is,
well, and right there, Matt, that's the old reminder that bulls take the stairs and bears take the elevator.
And you see that right here. And, that's the old saying, right? They take the stairs and the escalator. Now they take the escalator up and they take they take the elevator up and then they jump out the window coming back down.
That kid is back on the escalator again.
Exactly. But the one thing I do want to say is we talked about this last week, not the economics and the fundamentals of it, but I was talking about the momentum of it, about how you see this trend line right here. And it comes up, hits that trend line, comes up, hits that trend line. And then crude just starts this massive movement to the upside in the month of April and early May. And you're still above that trend line, Tim. So to me, I'm looking at this trend line here, a very consistent trend line. You're still up above that level. Now, obviously, I don't think you can have some very aggressive, bullish type stance on crude oil. But I'm telling you right now, for the first time in a few months, I feel very comfortable about maybe getting a directional position once we start seeing this slow down, or maybe even start writing naked puts down into about the $60 range, because I would be shocked if we see a 20% movement to the downside right now in crude. And that's what it would have to do. And so I'm looking at this as a potential cash flow situation. I'm looking at it as a potential buying situation, very similar to the breakout on the S&P 500. I think it's important to wait for that slowing momentum. You have these big movements to the downside. Don't fight that if you're a bull. Sit on the sideline, wait for that to slow down, come into this trend line, show a nice little small body candle, Morningstar, Doji, hammer, something like that, followed by an upward movement in price, which would create more like a bullish engulfing or a piercing line or a Harami type situation. And then it's go time. These things can represent opportunity. And, for the new trader out there that maybe popped their first trade right here when it's breaking out of 72, listen, that happens. If it was your first trade and you popped out of 72 and reversed right back, that happens. Bad timing. Unfortunate situation. But I want to show you what crude's been doing for the last year, Tim. This is what crude's been doing for the last year. Last week doesn't change this.
This is how you pull your perspective back and see the forest through the trees. And that's an old podcasting reference right there as well. If you've been around our podcast long enough, you'll go get that.
You said it right, by the way.
That's right. It's pulling back. It's finding some support. It's going to be interesting. We do need confirmation. All the action's been in the commodity and the currency markets, Matt. Let's go into gold for a minute. It's a very, very fascinating chart, in my opinion, and probably the one that you could draw a lot of takes on. But here's one. That's a kiss goodbye pattern. Old
we
support.
called this last week.
old support, new resistance. It dropped down. Now it's rallied back. You've got two red dojis in a row. Matt, confirmation below 1300 is a move to the downside. And I'm looking at probably targets somewhere down in the 1240, 1250 range. Short term, who knows, because it's so sensitive to what the dollar is doing in news and all that kind of stuff.
Yeah, but
But that chart's pretty clear.
It's technically pretty solid right now. We talked about this last week, how it was slowing down after the initial breakdown right here. Look for that snapback rally back up into resistance. That's exactly what it did. As you can see, this old support area over here is now acting as resistance. The downward moving 20-day period moving average is acting as resistance. This nice little trend line connecting the dots from resistance to resistance to resistance, that is acting as resistance as well. And I know you don't love your little Fibonacci's, T-Dog, but I'm going to tell you right now, it's hitting a nice little Fibonacci number as well. It's right smack dab at a 50% retracement level on a short-term movement. All of that is just a tremendous amount of resistance to stop gold from going higher. And you're looking at a trend where it was bullish, went neutral for a few months. Now it's bearish. If you see some type of level of consistency in these downward movements, you're talking about a price level that goes from 1360 all the way down to 1305. That's about a 55-point movement to the downside. You're talking about 1326 all the way down. So we'll say 1325 down to 1280. You're talking about a 45-point movement to the downside. So you're talking somewhere around 50 more points to the downside on average you can get down into. And just based on the average yield cycle, you're talking somewhere around 1245 to 1255 in this range down here. So if I drew a little box so that you can kind of see this, and once again, if you're listening to it on the podcast, definitely check it out on the Market Skyline on the YouTube channel. That's your price target into that range from that 1260 down to that 1240 area. And if you look over here, Tim, you got a nice little support level right here at that level. You also have support levels right here. So you have a historical support level right at 1265. Then you have a massive support area right there at 1240. So you're talking about a projection anywhere from 1305 if this trend does continue on the bear side. You're talking about it coming down into this range into here. And that would be my projection.
So much of what's happening in gold generally has been inverted against what the dollar is doing. And there's a lot going on with the US dollar right now. Number one is interest rates. As the treasury yields continue to rise, bonds fall, and the implication of what the Federal Reserve is doing with interest rate policy moves on, obviously gold can be impacted. From a relative strength standpoint, and Coach Greg over at Tackle Trading has brought this up a few times in a row on the commodity report, silver's not been hit as hard, Matt.
Silver hasn't broke support.
No.
Where gold was outperforming for a few months, silver is now holding its support levels. It's currently range bound between 1620 and 1680. A pretty tight range bound situation here. I see the breakout right here. I certainly could see that happening again. I'm not too concerned about the last breakout faking out and coming right back. You got a clear support level right there at 1620. You got upper ends of resistance here at 1680. If you're looking at a short gold scenario or looking at buying a put option to protect your gold to potentially hedge, you might also be looking at a potential buying opportunity on silver as well, a little cross pair action here. But, in looking at this, it is outperforming gold right now. We haven't seen that for some time. I'm getting a little excited about silver.
Could be an interesting one. When the metals do finally find a bottom, maybe silver is going to show some relative strength. I know that the gold-silver ratio has been out of whack for a few years now, Matt, putting gold as a little bit higher valuation.
Yeah.
And so silver has been attractive, but it just never did make the recovery. Maybe this is the start of something in that regard. Let's move on to the U.S. dollar here. And, Coach Keith, who does a little feature here for us today where he talks about what's going on in Europe and Italy specifically, but he also mentions the dollar in his Forex report each and every week. Just gangbuster strong, Matt. And
doesn't want to come down.
One of the strongest things in the market. And so much of it is just simply analysts and investors finally realizing the Fed is serious. Jerome Powell's going to raise interest rates. And they didn't believe it forever because, frankly, we had Janet Yellen and Ben Bernanke for the last 10 years telling us the same thing, and they never did it. But now I think that the sentiment has changed, and that is making the dollar strength really stick here. Once you've got a trend, I mean, that trend is now something to be reckoned with, Matt. How do you read this one?
It's obviously overextended to the upside. It is breaking out of an old resistance level here at 94. It's got upward level of resistance at 95. And the question for me is this a viable situation on the dollar? There's a lot of negative news coming out on the euro. There's a lot of positive news from an interest rate perspective coming out on the dollar. That leads to a very bullish situation for the dollar and very bearish for the euro. Reminds me really kind of that 2014, 2015 timeframe when the dollar just put the pain train, on the rest of the international currencies. I mean, it just didn't want to slow down. It was destroying the yen, destroying the euro, killing the pound, and it's starting to come back, and it's coming back with a vengeance. And you're looking at a potential breakout. So the only question you really have here is that type of signal, the breakout of 94, is that a viable situation? And I'm looking at the indicator RSI here, Tim, and RSI, when it gets above 70,